This is the Asia Trade. I'm Shery at this year's AI Summit in Seoul.
I'm Avril Hong in Singapore. The top stories this hour. Asian markets set for a cautious start to the week as investors weigh pressure on tech stocks and uncertainty in the U.S. economy. Senate Republican leader John Thune says a deal is coming together as he plans a test vote to end the prolonged government shutdown. Also ahead, China's consumer prices unexpectedly rise in October thanks to a holiday boost in travel and food spending, but economists say deflationary pressures remain. And we speak to industry players at the AI Summit in Seoul as doubts grow over the world-beating rally in AI and chip stocks.
Yeah, what a time to be here in South Korea for this year's AI Summit, the 8th edition, a two-day event that brings together AI experts and business leaders discussing the convergence of artificial intelligence and the industry. And this coming right off the sell-off from last week when we had the MSCI Asia Pacific tech companies losing the most ground intraday since April when President Trump applied blanket tariffs across the world. And this really showing the concerns around a potential AI bubble, right? Especially across Asia, where we're seeing high concentration of these companies in regional benchmarks. Here in South Korea, for example, Samsung and SK Hynix taking about 30% of the Kospi, TSMC taking about 40% of the Taiwanese benchmark. So we're seeing, of course, all of these concerns about circular deals as more and more of these agreements are announced every other day. And you can see those will be some of those conversations that we'll have here at the AI Summit, including, of course, social and ethical impacts of artificial intelligence and, of course, the job losses that we've also seen across the world.
Yeah, Shery, you're there at this AI Summit in Seoul for the week. We also have today the UBS Australasia event. And of course, when it comes to economic data, really the big one will be the China data bonanza that comes out on Friday. So we'll get signs of retail sales, industrial production, investment data as well. And they're all expected to point to cooling momentum in the Asian giant. Aside from that, we also have a 30-year bond auction out of Japan this week, jobs data out of South Korea and Australia. Now, in terms of the Chinese data, as I say, that will be what's kind of bookending the trading week, but already ahead of that, in the past weekend, if you take a look at this board, just take a look at how Asia stocks are faring at the start of trade, because we did get Chinese CPI numbers and they unexpectedly rose, and this was due to the long October holiday week. So maybe that points to stabilizing demand, but does that also feed into the narrative that maybe not just Asia stocks following Nvidia managing to pare losses by the close on Friday, but does Chinese tech also see some support today? Let's take a look as well at what we're seeing in U.S. futures. Strong pop at the open. I think 0.6% rise on the S&P 500 futures, pairing some of that at the moment. But as I said, it was really after that test for AI-related stocks, somehow Nvidia managing to pare those losses against the backdrop of this optimism that we're seeing an end potentially near to the U.S. government shutdown. Of course, this is coming at the time when the Fed is really driving in the dark when it comes to data. Now, as I mentioned earlier, the annual UBS Australasia conference also begins in Sydney today with discussions on energy, infrastructure and AI topping the agenda. Let's cross over to the event where Bloomberg's Paul Allen is with our first guest. Paul?
All right, thanks very much, Avril. Joining us now, we have Anthony Sweetman, co-head of APAC Investment Banking at UBS. Anthony, thanks so much for your time this morning.
Thanks, Paul.
One of the themes of this year's summit is resilience, global resilience. Against that backdrop, I'm just wondering how you would characterize the environment right now, because we've got a US shutdown, I think heading into day 39 now, a lot of uncertainty around trade, the tariff environment at the moment as well. So how would you characterize the investing environment?
Well, I think this year has been characterised by various periods of uncertainty, but at the same time, markets have, with a couple of brief exceptions, remained strong and constructive throughout that period. And I think that's generally what we're continuing to see.
So is it having an impact on deal making?
It's a little bit early to tell in that regard, but if you look globally, activity seems to be accelerating in various areas, and again, we think the outlook continues to be constructive, and in some areas it's probably more limited by the amount of opportunities rather than the interest in pursuing opportunities.
One area that's obviously red hot at the moment is AI, and it feels like the question of the moment right now is it in a bubble? Would you consider AI stocks to be in bubble territory?
I think there's probably no doubt from most people that we're going to see continued demand for AI products and services, and you're seeing investment to try and meet that demand. As to how that plays out in the longer term from a profitability perspective for the participants in the market is to be determined, and I think it will probably be several years before that's clear.
So how do you position around that narrative at the moment?
Well, I think from a financial services provider perspective, there's both the use that I think we and others in the industry are looking to utilise to improve our efficiency and improve our service to our clients. There's also in terms of providing services to the participants in that model, whether that be from a capital raising perspective or M&A, or again helping institutional clients.
So which sectors would you describe as fragile at the moment, and which sectors do you feel could stand to benefit?
That's difficult to predict, and I think that's changed a number of times during the year. If you look in recent weeks, one of the sectors that's probably benefited the most from the global uncertainty and changes has been rare earths. If you look at the increase in prices for the companies involved in that, but also the availability of capital from governments and others to develop new projects. Now, that still appears to be the case at the moment to diversify supply, but clearly following the US-China discussions and opening up of volumes, query whether that continues.
I do feel like that conversation around rare earths and the need to diversify has been around for probably as long as I've been in this business. Do you see things actually changing this time? Do you see that grip that China has on the market finally breaking?
They will continue to be a very important producer and supplier of the materials, but I think there is, if you want to call it genuine intent, to diversify that supply, and you are seeing that in terms of money going in to new companies and new projects to do that. So I think, yes, you'll see a diversification there.
Another theme that we're often talking about at the moment is private markets, which are attracting a huge amount of capital globally at the moment. How is UBS positioning to capture some of those flows?
Well, I think we obviously serve both private and public markets, and so it's a matter of providing, if you want to call it, services to those parties, in whether it be to raise capital, but also then in terms of secondary trading by investors in unlisted assets. That is a focus for the group, and I think you'll continue to see that grow.
When assets are unlisted, though, there's always these questions around opacity, which sort of introduces these ideas of risks as well. How do you navigate around that risk?
Well, again, I think it's more an issue for investors, because historically there has been a illiquidity premium, which is one of the factors that has attracted more investment into private markets. Where people require liquidity, that's obviously more challenging relative to listed markets. So I think there is a trade-off in that regard.
Let's talk a little bit more about deal activity and where you see that coming from in 2026. I mean, you've mentioned a lot of activity in rare earths. So there's some other sectors that you're watching as well, and other markets also.
I think most sectors have been reasonably active, but when you get into an individual market perspective, it's quite often a function of what are the opportunities in that market, but also what sectors haven't been busy in recent years. In the smaller markets, for Australia, for example, it's rare for any sector to stay busy year in, year out. But take an example of one that has been busy in recent years and continues to appear busy, when rare earths being part of it, is mining and resources. Gold being another area that's been particularly active in that regard.
Well, another market geographically that's become quite busy is India. How do you see the renewed global appetite for India evolving over the next few months?
I think it'll continue to increase, but it is off relative to your large developed markets like the US. It is off a relatively smaller base. So the absolute level of activity would expect to continue to grow, but it will be a long time before it catches up with some other more established active markets.
So with this in mind, can you tell us a little bit about your strategic priorities for the next 12 months, 2 years?
From a UBS perspective in the region, it's continuing to invest in the region. We've had a very long presence here and very strong market positions in most areas in which we're active. So if you look in Greater China, we obviously have a very successful business there and have been active for decades. If you look at other areas through the combination with Credit Suisse, something like Korea, we have a #1 business in investment banking there now, as we do in Southeast Asia and Australia. There's other areas such as Japan, which is a very important market, where the focus will be to continue to grow our position in that market, which we expect to continue to remain active.
Well, here in Australia, we've got a lot of overseas players like Bain, KKR as well, showing quite a lot of appetite to acquire Australian finance sector businesses. Is that a trend that's starting to gather pace, do you feel?
I think it's been a trend that's been there for a number of years. Again, I think that interest, because of the underlying demand, and you've got a sector in transition, particularly on the wealth side, we'll continue to see activity, but it will be somewhat limited by the number of opportunities that are there. Recognising the number of assets did trade and change hands in prior years.
Well, you told us last time you were at this conference, and we were at this conference, that a lot of wealthy Australians are starting to increasingly invest globally, and Australia is becoming more attractive for foreign investment as well. Since that conversation 12 months ago, have you seen, what evolution have you seen in that space?
We've continued to see that trend, in that if you look whether it be our superannuation sector or private clients, there continues to be a flow of capital from Australian investors globally. Now that reflects both the fact that historically Australian investors have been very overweight Australian equities in particular, but also that growing savings pool and the need to deploy it.
Well, I understand you're heading to Hong Kong soon to take up a new role. What are you going to be? What are your goals going to be when you get there?
Well, there's a lot for me to learn about the region. It is a diverse region. In our case, it covers 13 locations, none of which are the same, and so it's learning that. But also being part of, if you want to call it, the continued investment by the group in the development of our business in the region.
Just before we let you go, heading into 2026, is there any key risk that keeps you awake at night?
More the macro environment. I think the biggest driver of the industry and our business is market conditions, and while they look positive currently, there's no guarantee as to how long that continues.
All right, Anthony, thanks so much for joining us. That's Anthony Sweetman, co-head of APAC Investment Banking at UBS. Avril.
Thanks, Paul. Paul Allen in Sydney for us. And we have more from the UBS Australasia Conference. In the next hour, we speak to a former official at the US National Economic Council about the outlook for the economy and monetary policy and the impact of the AI boom. Now, also in Australia, one stock we're watching, ANZ, full-year cash profit missing the mark in terms of estimates and down, I think, 14% compared to the prior reading or the prior year. And its CEO says that action is needed and that he's revamping the bank by reducing costs and focusing on making the firm simpler to accelerate growth. We saw it dip at the open about 1%, as much as 1%. It's paring some of those losses for now. We have more ahead on the Asia trade. This is Bloomberg.
U.S. Senate Republican leader John Thune is planning a vote on a spending package that would end the government shutdown. A source says a group of Senate Democrats may support the measure if final details can be worked out, including protecting government workers from layoffs. Thune earlier slammed Democrats' proposal for a one-year Affordable Care Act subsidy.
Republicans are not about to further burden taxpayers by blindly extending a flawed program. The Democrats' proposal is just more of the same, masking rising premiums and padding insurance companies' profits with more taxpayer dollars. The Democrat leader's proposal is a non-starter.
Let's bring in Bloomberg senior editor Wendy Benjaminson. Wendy, the longest government shutdown in the United States on record. Is it near the end now?
It could be, but this could all fall apart this evening. Right now, Democrats are meeting to see what it is they're willing to vote for. And what they have been presented with is a plan that would fund the Veterans Affairs Administration, the Department of Agriculture, which also administers the food aid that poor Americans are going without now. And it would also fund Congress itself for a year, and then other agencies would be funded through the end of January 2026. And then they would have to do all this again. And they would get a promise of a vote to extend those health care subsidies that John Thune was just talking about in that clip. This is the big sticking point, is whether enough Democrats, and they need 8 to 10, will trust Republicans enough to go ahead and vote on a promise that they can extend the health care subsidies.
Wendy, I wonder, given how we've seen various areas being impacted, including U.S. airports and flights being affected, does that in some way also add the pressure so that if we get a deal now, it is less likely to fall apart?
Yes, I actually think that the pending Thanksgiving, the last Thursday in November is our Thanksgiving holiday. It is the busiest travel holiday of the year when families get together. And the idea that would be badly impacted, thousands of flights canceled, thousands of delays and chaos at airports, that is something that no congressman wants to be blamed for. And I think they are under tremendous pressure as the holidays approach to get it done. So yes, I think that is a big impetus to making them maybe trust Republicans a little bit more so that they can, get everybody back in the air as well as fed and supported, in the ways they're supposed to be supported.
Tell us a little bit about the economic impact in the U.S.
Oh, there's a tremendous impact economically as well as personally. Right now, we have 40 million Americans who rely on food aid to feed their families, and that is tied up in the courts. They're not getting that money right now. You have thousands upon thousands of federal workers who have been furloughed, so they are working without pay. And the whole reason we're having these delays and shutdowns at the airports is that air traffic controllers aren't getting paid, and some of them are simply either calling in sick or going to work a second job so that they can feed their families. Remember, government jobs are not particularly high paid, but it is also having a broad economic impact. It's costing about $15 billion a week for this shutdown to keep going in economic impact. So there is a lot of reasons to get this over with, but the Democrats really feel that with the election results they had this week in some state elections, it was a Democratic sweep, and so they feel emboldened that they are not getting blamed for the shutdown. But I think as we get closer again to that holiday travel season, Americans are going to blame whoever's standing in front of them.
Yes, which would give politicians impetus, as you say. I wonder as well, it's not just about the economic data, or it's not just about the economic state. It's also about the data that we don't really have. And this is coming at the time when the Federal Reserve is probably at its most divided in recent times. If we do see an end to the shutdown, how soon can we see the regular data coming through, you think?
Well, it would probably not take too long to get it up and running, although the reports might be delayed because no one has been collecting the data during the shutdown during the last 40 days. So there will be a big scramble. And then, of course, the Trump administration would have to agree to get everything up and running again. And they may want to I don't know if they want to extend the pain, but for political reasons, they may want this to look like it's more of a Democratic Party, problem and keep the pain going for a little while. But you're right, the Fed will be flying blind for its December meeting if this isn't resolved soon.
Yeah, of course, the markets and investors really not knowing what to do with where we're headed here. But Wendy, when it comes to the political agenda in the United States. We have the elections. We have an ongoing government shutdown. What's next that could be the next catalyst here?
Oh, who knows? It could be the next Trump social media post. Who knows what the next catalyst is? If you mean the next catalyst to reopen the government, I think we are at that inflection point. I think Americans are starting to be really fed up and are eager for this to end. And I do think the movement we're seeing today is an indication that Congress might actually be getting that message.
Wendy, thank you so much for your insights and bringing us up to speed on all of this. Bloomberg senior editor Wendy Benjaminson. Now, some other top stories out of Washington. President Trump's economic advisor says the government shutdown will likely have a significant impact on economic growth. National Economic Council Director Kevin Hassett told CBS that a prolonged shutdown could cause fourth quarter GDP to turn negative. He also spoke about the outlook for inflation, with the shutdown likely to delay the release of the official CPI print.
I'm comfortable with 2% inflation.
So no, you're not happy where things are now.
Well, they're going to go down a little bit more, but the point is that inflation is like the Queen Mary, my friend Alan Greenspan used to say. And so when you go from the almost 4% that we had in January down to the mid-2s, then that's a trajectory that usually has momentum.
U.S. Treasury Secretary Scott Bessent says President Trump's suggestion of a tariff dividend could come via the tax cuts in his signature economic policy bill. Bessent made the statement on ABC News when asked about Trump's social media post, where the president said each American would receive a dividend of at least $2,000 from import duties.
The $2,000 dividend could come in lots of forms, in lots of ways, George. It could be just the tax decreases that we are seeing on the president's agenda. No tax on tips, no tax on overtime, no tax on Social Security, deductibility of auto loans. So, those are substantial deductions that, are being financed in the tax bill.
More ahead on the Asia trade. This is Bloomberg. Let's take a look at some U.S. assets amid this optimism that we could finally soon be seeing a deal that could end the U.S. government shutdown. NASDAQ futures outpacing what we're seeing on the S&P 500. And of course, this is coming against the backdrop of the Fed really at a time where decision-making has been relatively divided, but the absence of data is making things really tricky. We are seeing the concerns about how this might drag on the U.S. economy as well, and worth noting that the Bloomberg Dollar Index is sliding for yet another session. I think this is the lowest in about a week that we're seeing it, Shery.
Yeah, not surprising given that we have seen the economic impact already. As you mentioned, consumer sentiment falling to more than a 3-year low. And on the absence of data, you can see that oil has also been drifting. The government shutdown stopping the release of the weekly commitments of traders' reports. So really no positioning data amid the ongoing U.S. government shutdown, the longest on record. We're expecting some sort of test vote today in Congress. More ahead on the Asia trade. This is Bloomberg.
Here's another look at what we're seeing across currencies, with the Bloomberg Dollar Index coming under slight pressure, actually reversing those losses for the moment. And we are watching out for any developments related to the U.S. government shutdown. But aside from that, at the bottom of the hour, we're going to be getting the BOJ's summary of opinions from its most recent meeting, dollar yen hovering at the 154 level. But of course, over the weekend, we also had China data, and that showed that consumer prices unexpectedly rose in October as holidays during the month actually helped to boost travel, food, and transport demand. Let's bring our China correspondent, Min Lo. So, Min, give us a breakdown of the data. Are we seeing the start of a sustainable recovery?
Well, hard to say, right? It's the start of a trend, but analysts are not convinced that we could see inflation picking up before the end of the year. Let's take a look at the breakdown of the data first. So this month, in October, we saw CPI coming in positive at 0.1%, which was better than the estimate of a decline of 0.1%. PPI coming in at a decline of 2.1%, which was also better than estimates and beating the previous month's numbers as well. If you can show the CPI data, please, this is the wrong chart that we're showing right now. But that number shows you that, yes, here you can see things are looking a little bit better because of the Golden Week holiday, which was 1 day longer than previous years. So that provided a one-off boost to those numbers. But analysts are saying that they are still expecting PPI to decline possibly until mid-next year. And it also means that the anti-involution campaign still has a lot of unfinished business, right? The impact so far has not been strong enough. Some are saying that the enforcement is not strong enough, especially given the government concerns over forceful intervention and how that could potentially lead to job losses if they come in to forcefully close down excess capacity in certain sectors. So it's a difficult balancing job for the Chinese government right now, especially towards the end of the year when we have GDP on track to meet the target at the end of this year. Analysts are not expecting the government to go very aggressively to try to tackle this inflation problem.
I mean, Bloomberg also did its own analysis of China's price data over the past 2 years. What were the key takeaways?
Yes, Bloomberg did an analysis tracking 67 goods and services over the past couple of years, and we found that 51 of these items showed very steep price discounts, far steeper than what the headline CPI tells us. But of course, the headline CPI doesn't provide the sort of granularity that might be more common in other data sets, such as the ones that we get from the US, for example. So you can see on this chart of the items that Bloomberg has compiled, you can see some of the biggest declines come in everyday, ordinary items that people would have in their kitchens, for example, things like pears, cucumbers, eggs, eggplants. These are seeing double-digit declines, 31% decline on the prices of pears. Of course, BYD cars also down by 27% or so. Some of the other items, you look at household appliances, for example, like microwaves, down by 8%, fridges, washing machines down by 4%. And these are the sectors that were actually doing pretty well because there had been government subsidies supporting the household appliances, and yet we still see price declines there. Where we are seeing price increases, though, is in some of the services sectors. So you look at attraction tickets, slight increase of 0.4%, three-star hotel rates up by 2%, kindergarten fees, residential management fees, those are up by 3 or 4% or so. So overall, we are still seeing very steep declines in a lot of ordinary items, and you might think that this is a good thing for consumers, right? But actually, when items continue to see a fall in prices, consumers might hold back spending, especially in anticipation that prices could fall further, especially for large ticket items. And this in turn affects industrial profits. We already see about more than 25% of Chinese listed firms in the first half of the year reporting losses, and that's the highest we have seen in a quarter of a century. And this then in turn affects capex spending and R&D spending, as well as wage increases that people could get, and it leads to this deflationary spiral that is very hard to break up.
Yeah, that deflationary mindset, as you mentioned, the slow killer of economies. Min Lo, good to have you with us, Bloomberg's China correspondent there with the latest data from the country. The latest also from the corporate front. NVIDIA CEO Jensen Huang says he's asked the TSMC for more chip supplies to keep up with booming AI demand. Speaking at a TSMC event in Taiwan, Huang says NVIDIA's AI memory chip suppliers have scaled up capacity to support the company. TSMC CEO C.C. Wei confirmed Huang's request, saying the chipmaker expects record sales every year. China has confirmed that it's taken steps to exempt compliant exports of Nexperia chips intended for civilian use. At the same time, the Commerce Ministry urged the EU to press the Netherlands to, quote, correct its erroneous practices. The move follows talks between Dutch and Chinese officials after China curbed exports in retaliation for Dutch controls on Nexperia.
Shery, as you know, the UBS Australasia conference is underway in Sydney, and we're seeing those live images of the RBA's second-in-command, Hauser, actually saying that the central bank can still return inflation to target over the medium term, and adding that to reach past growth rates, they need more supply capacity. Of course, this is coming against the backdrop of the RBA last month leaving rates unchanged. This was more or less as expected, but we did see the housing prices really coming to the fore in terms of making it a lot trickier for the central bank to cool prices down. Live pictures you're seeing there from the event in Sydney. We have more ahead on the Asia trade. This is Bloomberg. Let's take a look at how Japan assets are faring. Nikkei futures pointing to a rebound following a week where the AI rally really got tested, not just in Japan, but across Asia and even in the US. We are, of course, watching out for a couple of bond auctions this week, including the 30-year and 5 years. The long end has been really tricky of late. Dollar yen seeing that climb higher towards that 154 level. We are waiting out for the BOJ summary of opinions from its most recent meetings. Now, aside from that, it's been a busy week and is set to be a busy week for earnings in Asia, with Tencent and Hon Hai on watch for signals on AI demand. We're also expecting quarterly results from Softbank. Bloomberg Intelligence says the company continues to benefit from a surge in AI enthusiasm. For more on what to expect, let's bring in Masahiro-san for perhaps what we can see from these Sony numbers. To what extent do you think the gaming business is likely to continue supporting growth?
Good morning. Yes, Sony's gaming business should be quite solid in the September quarter as well. And in the June quarter, the Sony gaming segment surprised the market. It generated quite high earnings, operating profit, due to its solid business model. So it does not really depend on the Sony hardware, but it's shifting to the multi-platform model, so they have a quite strong network business. So that business model should contribute to the strong operating profit in the September quarter as well. And we had a very strong gaming title in the late June, so that title should have contributed solid revenue and operating profit in June quarter. So I think that the second quarter gaming operating profit could be quite a similar level as the first quarter level. And if we look at the December quarter, we will have a new game software, Ghost of Yote, which was a successor of the previous hot hit title. So I think that December quarter operating profit should remain quite strong for Sony.
Yeah, let's bring in Avril, our tech correspondent as well, for those Softbank numbers that we're expecting. What we'll be watching out for as we get this latest earnings?
Yeah, well, there's going to be a lot of focus actually on what is its biggest business segments or its core business segments, and that very much comes down to the consumer business side because it actually makes up 45%. You said, or Avril said in the introduction there, we actually are expecting higher operating profit for the period. This is the fiscal second quarter. So if you just bring up some of the estimates there, net income seen coming in at around 180 billion yen, operating income seen at just north of 300 billion yen, and as well sales or net sales for the period, the estimate is 1.6 7 trillion yen. So again, should be pretty robust quarter. Morgan Stanley, for instance, that's Morgan Stanley MUFG. They're expecting consolidated operating profit to be up 6%. And again, looking back to these firm earnings that they're getting from their major business, SBI Securities is another. We've spoken to this, and they're saying that the customer acquisition environment is, again, expected to hold up in the period. But you're just taking a look at SoftBank versus the topic. Actually, SoftBank shares have underperformed the main benchmark this year by a tune of around 10%.
Belle, SoftBank's Vision Fund also likely to be a major focus.
Yeah, that's right. I mean, the Vision Fund is always one of the segments we watch most closely. It's got publicly listed holdings, but also private companies in that as well. In terms of the public front, it's been very much its major holding or investment that it made in ARM. That's the chip designer, of course, and really shifting the business away from what's been that sort of traditional telecom investment company into an AI one instead, ARM being one of the beneficiaries out of this. In terms of the private side, it's OpenAI investment, or OpenAI investment rather, is a major one for the company as well, because that's a $32 billion direct investment in the business, not yet listed. There was some reporting from Reuters over the weekend. They could be looking at a listing as soon as 2027, but certainly OpenAI does give them further exposure to generative AI, but no operational business in that as well. For the China side, they've got their investment in DD Global. We have seen gains in that company, even though it's not publicly listed as yet, but still could bode well for its Chinese assets that are yet to go public, and also any update we get in terms of robotics investments as well, given that SoftBank made a major investment into ABB Robotics with a $5.4 billion purchase.
And Masahiro, of course, when it comes to Sony, we will expect to see the impact of tariffs. Although that has been resolved now between Japan and the U.S., we are talking about the latest quarter. So do we have any numbers in mind at this point?
Regarding tariffs for Sony, I think that the company is coping well with the increase of the tariff rate so far. And in May 1st, Sony announced its potential impact that was expected around 100 billion yen. And it's quite just below 10% of the total operating profit. But Sony is well navigating the situation, and in August, when Sony announced the new numbers, that was revised down to the 70 billion yen. So I think that Sony is coping well with the tariff rate. And if we look at the gaming business, they are successfully diversifying their supply chain. So some production sites are shifting from China to some other countries, including Vietnam or some other Asian countries. So that's pretty much well working for Sony. And if we look at the other business, such as TV or some cameras, they are making some products in Mexico. So I think that the business could be a little impact. And they all, in the past, in May, Sony included some indirect impact of the potential revenue decline for the smartphone, I mean the iPhones. They supply some components to iPhone, but I think so far iPhone sales should be quite good. So maybe Sony's image sensor impact could be smaller than expected. So I think that all of all, I think that Sony is coping well with the situation.
So it sounds like overall relatively insulated from the impact of tariffs for now, at least. Thank you both, Asia Tech correspondent Annabelle Drolas and Bloomberg Intelligence senior industry analyst Masahiro Wakasugi. Now, chip names in Japan and South Korea also in focus today, with NVIDIA's Jensen Huang saying he asked TSMC C.C. Wei for more chip supplies to help keep up with AI demand. Catch Japan Ahead every Monday at 8:40 a.m. if you're watching in Tokyo, and subscribers can watch live on the terminal using the TV Go function. This is Bloomberg.
take a look at how U.S. stock futures are trading after that big sell that we saw in the U.S. session last week when it came to those tech stocks. And of course, we've been watching the same here across Asia with the biggest MSCI Asia Tech Index fall since the April U.S. tariffs. And you can see that when it comes to valuations, of course, Asian tech stocks have been much more attractive. So we have seen that incredible rally that has even prompted the Korea Stock Exchange here to warn the SK Hynix rally of 200% that we saw in the past year. But this optimism over AI continuing across the board. So let's discuss what's happening across the board as we are here at the annual AI Summit Seoul and Expo event today, bringing together global companies, institutions, and experts, of course, to discuss the convergence between artificial intelligence and industrial innovation. Joining us now is Jun Baek, CEO of FuriosaAI, a Korean startup that develops chips for AI inferencing. Jun, good to have you with us. Thank you so much for making the time.
All right, thank you for your time, Shery.
You have had such good news recently, whether it's really that contract with LG, whether it's new financing rounds, and the latest that we heard was about that $300 million financing round back in September. Can you give us an update?
Sure. So we recently launched our second-gen chip called the Renegade. We showed our kind of customer, partner, our investors, like we executed our milestone successfully, bring out our silicon successfully. And also we had showed good traction with the customers, such as LG. So that kind of gave us some good amount of confidence to our investors. And another thing definitely is the chip we are developing, which focuses on the inference in the data center. You see the demand for inference, the AI applications are exploding these days. So it's another kind of, it gives another confidence to investors. The market is very exciting.
I definitely want to get into the technology that you're building, but when it comes to the financing round, when will it officially kick off?
The financial round, the last round?
$300 million.
Oh, okay, the new one, actually. Yeah. So we will start our fundraising campaign very early next year.
Very early next year. Do you have any banks selected for the whole process?
Definitely, we are working with, currently, we are right now considering the bank to work with, actually.
Oh, you're still in the decision-making process. When it comes to this new funding round, is this sort of a prequel and setup for an eventual IPO?
Definitely, we will do IPO at the right timing and the right point, actually. So, but this is the round for our own, to accelerate our development and our go-to-market. So we'll see when we'll do IPO.
When it comes to the market, for example, you talked about the contract with LG. Who else are you thinking of right now?
I cannot reveal the name yet, but we are talking to quite a good major enterprise company globally at the moment.
We heard that you were providing some chips to Saudi Aramco.
We are definitely working with customers in the Middle East as well at the moment. Yeah.
So tell us a little bit about the chip itself, because you're talking about Renegade and you're talking about a whole different set that potentially could compete with NVIDIA. Why do you think that?
In the first place, we believe the AI chip needs to be more sustainable and more energy efficient, while delivering quite good high performance to run these AI applications. And we think there should be new innovation on the fundamental architecture and the technology itself, actually. So we believe Renegade has really fundamentally a better architecture than the current paradigm. And the ecosystem needs a kind of new, more sustainable solution at the moment.
Yeah, because right now the concern has been about a potential AI bubble, right? Will you need that infrastructure build-out that's happening right now and all of these investments? Is that a concern for you?
It's not a concern for us. I think it's actually, it provides even us more compelling story and the reason why we are important here, actually. Because AI bubble, people are worried about too much capex and too much energy spending on this new infrastructure, meaning that we need a more sustainable and cost-effective and energy-efficient solution, which is what we are doing, actually.
You're a South Korean startup, right? What's the importance of building this technology in this country?
As you know, South Korea has been always strong with the hardware sector. As you know, it has, one of the best car company, kind of a mobile company. You know, it also has a rich semiconductor ecosystem. In this new AI era, we also believe Korea will play a very important role in this AI infrastructure, especially around the semiconductor, because we have a great talented pool of semiconductor engineers who can innovate and who can build great products here.
It's been amazing to see the build out of the ecosystem around artificial intelligence here. But what about the funding? Are the funds here, or do you need to really appeal to other markets in order to get the capital for the development?
I think we need definitely both. We need to definitely appeal to global investors to scale our efforts, actually. We need to convince the global community and not only customer side, but also funding side that Korea will play a major role in the semiconductor, and the global funding will accelerate our development as well. So we'll need to talk
When you're looking about those investments that could officially kick off next year, who are you talking to?
We are definitely talking to all the global investors in the US and other areas. Yes.
The Middle East.
Yes. Yes.
Junpek, really good to have you with us today here at the AI Summit in Seoul. He's the CEO of FuriosaAI, Avril.
Okay, pleasure meeting you.
Shery, thanks so much. Now, of course, we're also watching the developments surrounding a potential end to a U.S. government shutdown. And in the past 10 minutes or so, we've heard how the Senate, the GOP, is proposing a stopgap spending bill through January 30th. In the meantime, we had the Democrats, Hakeem Jeffries, issuing a statement, though. This is prior to, of course, the GOP proposal, and vowing to fight on. So among the things that we are watching, even as we watch for this optimism surrounding a potential end to the government shutdown. Markets open next in Seoul and Tokyo. This is Bloomberg. This is the Asia Trade. We're counting down to Asia's major market opens. And of course, Shery, we've been coming off a week where AI's rally has really been tested. We are seeing optimism towards the U.S. government shutdown, perhaps, but also digesting the BOJ summary of opinions from its meeting last month.
Yeah, things are heating up right now. Can you hear the music ongoing at the AI Summit in Seoul? This is the 8th edition. It's a two-day event bringing together, of course, experts and business leaders, talking about the convergence of artificial intelligence and industry. And you said it, we're coming off the back of a sell-off when it comes to tech. So what a time to be here talking about a potential bubble and the opportunities that could lead to more growth ahead.
Let's take a look at how Japan is faring in the early goings after a really trying week. We are seeing that rebound at the open, about 0.7%. Might tech be leading the way? Of course, this week we have Softbank, we have Sony earnings as well. And don't forget that on Friday, we did see that U.S. government shutdown optimism towards an end, helping NVIDIA to pare losses by the close. Does that government shutdown optimism or optimism towards an end of that actually contribute to what we're seeing in dollar yen? Certainly it is nudging towards the 154 handle. But let's recap as well what we got from the summary of opinions from the BOJ. We're hearing that one BOJ member said a rate hike now would be step to normalize rates, and another saying that the timing of the rate hike is nearing. Of course, we don't know from the summary of opinions who exactly is saying this, but we are watching for any indication that out of the two mood in centers from the last two meetings, whether we see any other members perhaps leaning a little less dovish. Take a look at what we're seeing in South Korea. The stock market is expected to show that bounce and is running ahead about 1% for the moment. Given the moves in the dollar, interesting to keep an eye on dollar Korea won. Take a look at US Treasuries as well, because we did see it on the 10-year holding towards that 409 level thereabouts for the moment. It is selling off on US Treasuries and edging towards 412. Again, as we mentioned earlier, what we're seeing in AI, that might be something that's playing out through the session in Asia as well. But we, of course, also heard from the likes of Kevin Hassett when it comes to the US government shutdown. Take a listen.
Thanksgiving time is one of the hottest times of the year for the economy. It's, Black Friday and all that kind of stuff. Right. And if people aren't traveling at that moment, then we really could be looking at a negative quarter for the fourth quarter.
Let's bring in Bloomberg M9 strategist Marc Cranfield. So, Marc, what are we watching in terms of the potential for that sustained rebound in the AI space?
Well, what we saw on Friday was a very good intraday rebound for NVIDIA. A lot of people will be using that as their benchmark for where AI stocks are going globally, actually, not just for the US as well. So it had been selling off for a few days, and we heard that story that the chap who was behind the big short has actually been selling NVIDIA. That helped to knock it down a bit. But the intraday rebound on Friday was very impressive, and that will probably settle the nerves a lot for people in Asia today, who will probably start switching their attention more towards whether this US shutdown ending is real or whether it's going to continue for longer, and what will be the impact on other markets. Certainly, there was a lot of talk last week that AI bubble is here and our valuations are already too stretched. That will probably go on for a long time. But as long as these major companies are making very good profits, NVIDIA reports in just over a week's time, and that will help to probably to reassure people that for now at least they are able to monetize it. Looking into next year, maybe a different story, but for now it seems to have legs.
Marc, good thing that you mentioned the government shutdown in the United States, because we are getting the latest lines now saying that key Senate Democrats are planning to advance the Republican bill to end the government shutdown. Remember, Democrats have been rejecting this plan in order to demand that one-year extension of the Obamacare subsidies for low-income Americans in exchange for agreeing to reopen the government. We had heard from Republicans that the deal could be coming soon. We are now expecting to see that vote any time when it comes to reopening the U.S. government. And Marc, really the economic impact has been felt already. Of course, we're talking about billions of dollars being wasted every week, but at the same time, the lack of data making it very difficult for the Federal Reserve and for investors to gauge where the U.S. economy is headed.
Well, you can see what investors think already. First thing this morning, S&P and NASDAQ futures, they jumped higher. People looked as though they're hoping that this shutdown is going to end this week, as we understand it. If the Senate gets on side, it still has to go back to Congress. The earliest probably would be Tuesday, Wednesday. So it still looks as though it will be something towards the end of the week if they keep everything on track, and that is by no means a certainty. But anyway, equity traders seem to be thinking it's realistic, and Treasury bonds in return have gone much lower as well. Now, it all coincides with a very tricky week for the Treasury market. We've got big auctions this week, 3, 10 and 30-year auctions all coming due at the same time as people will be expecting more details on where government spending would be going if the shutdown concludes. So traders have a lot to deal with this week. We can expect some very choppy, erratic trading as more headlines drop, whether the shutdown is on or off, and to what extent the Treasury quarterly refunding needs to be increased. Scott Bessent may have something to say on that later in the week. It is going to be a nervy week, but for now it looks as though yields want to edge higher, but equities see the positive side of it.
All right, as always, thank you, Marc, for helping us wade through all this. Great stuff. Marc Cranfield, Bloomberg M-Live strategist for us. Now, the UBS Australasia conference is underway in Sydney. Let's head back to the event where Bloomberg's Paul Allen is with our next guest, who previously served as the Deputy Assistant to President Bush for Economic Policy. Paul?
Thanks, Avril. Yeah, we're joined now by Marc Sumerlin, Managing Partner at Evenflow Macro. And Marc, perfect time. We're actually really lucky to have you here today because you nearly got caught up in the flight chaos inspired by the US shutdown, and we've just had the news. We're progressing now towards a deal. What's your sense of where things are at?
Yeah, I think finally both sides look like they're going to come together, and about 8 to 10 Senate Democrats are going to come across the aisle and join Republicans to reopen the government. Generally in the U.S., when air traffic starts to get shut down, that's the point where pressure builds and it's unsustainable. And so the airports are a total mess right now back at home. I have family that's stuck in airports right now, and there are people at this conference that haven't been able to make it here. And so that tends to focus the mind, and we see it happening today. It'll take about a week to mechanically reopen the government, but I think we're finally getting close to the end.
You obviously have contacts in D.C. Are you able to share any of what you've been hearing?
Yeah, it's just that finally about 8 to 10 Senate Democrats have decided to break off from leadership. And so the Democrats, after having a huge election night, were re-energized to hold out for a broader healthcare deal, and that just wasn't happening. And so both sides traded offers on Friday, and they couldn't get there. And these Senate Democrats are basically agreeing that, all right, we're going to reopen the government. We're going to get a vote on healthcare. And maybe a few other things that we haven't heard about yet, but it's just not tenable to shut the nation down, especially with the Thanksgiving holiday appearing.
Well, we were discussing just earlier in the show how choppy things get ahead of a US government reopening. How should investors position for this?
Yeah, I mean, one of the most interesting things is that we actually, with the government being shut down, the government's been collecting taxes but not sending as much money out. And so we've seen the Treasury General account, which is the cash account for the Treasury at the Fed, going up. And that's literally money coming out of the private economy. When that gets reversed, the Treasury General account can start to go back down. And so we've had tight liquidity. We're going to have a little bit of looser liquidity. Not a gigantic thing, but at the margin, it could be a little bit better a couple of weeks ahead as that liquidity goes back into the economy.
Well, another symptom of the shutdown has, of course, been the lack of data, which has impacted the Fed as well. How hard is this making life for not just the Fed, but for anyone who's trying to predict the Fed's next move? What are you watching?
Yeah, no, it's a very, very good question. So Chair Powell has said that if the Fed doesn't have enough data, that they won't move in December. I don't quite agree with that conclusion, that if you're in a fog, it doesn't mean you can't move at all. But we have good claims data at the state level. So if there was a sudden break in the labor market, we would have seen it in the state level, the data that's still being. We get private sector data. You have to be very careful because some of that private sector data that doesn't give you all the details that the government does is actually picking up a decline in government employment. And so the Fed gets more than any of us, and we can see that all week long we had Fed speakers say they're not seeing any change yet, and so they have the best look. But that's the best that we can do. I think we'll get, as soon as the government opened, we should get the September employment report pretty quickly because that should have been completed when the government shut down on October 1st. We're probably not going to get the household survey for October because those phone calls probably didn't happen, but we should get a jobs number because the companies that do that save that data.
Yeah, you mentioned that private sector data, and we got some last week which showed layoffs among companies were rising as well. So we will get more clues, as you say, when we get those September figures. But what do you feel is the greater concern at the moment? Is it jobs, or is it the stickiness of inflation?
I mean, within the Fed, it's both. I don't think they should be worried about inflation right now. The way that I think about it is with jobs approaching below kind of 50,000 a month, you have to be very careful about rolling the economy into recession. And if you do that, it takes 4 years to recover. And so you have to be super careful about that. The bigger concern on the other side is whether or not we're inflating an asset bubble. On inflation itself, I think the next impulse is down in the U.S. because we can see rents, which are about 30% of inflation, they're falling in the real world. Apartment prices are falling. Single-family home rents are low. We can see oil. There's enough oil out in the world right now, and oil prices are falling. and unit labor costs, which is wages minus productivity, are running about 2%. And so I think the next impulse is down. And so for me, it's much more about an asset bubble versus recession than about these, narrow changes in the inflation rate.
On the subject of asset bubbles, I give you Exhibit A, AI. Is this run-up that we've seen in those stocks sustainable, or do you feel like there's a dot-com style correction on the cards?
Yeah, I think the thing that bothers me the most about the asset prices with AI is a lot of the valuations that we're seeing, 30 to 40 times earnings, are more applicable to an asset-light type of company. And so if we think about Facebook in 2005, unlimited potential, they did not need a lot of people and capital. Tech today is really like an industrial firm where they need a ton of power. They're building a lot of stuff, and they have all of these constraints that a normal company has. And that type of valuation should be closer to something like 15 times earning. But I don't have a catalyst to tell you why that's going to change right now. And I think that growth next year is going to be pretty good. And so we probably keep running for a while.
Yeah, there's an interesting balance there as well, because you can't see it, but off camera here, there are a number of billboards, other advertising material spruiking the benefits that AI are going to bring, particularly in terms of lifting productivity. But of course, the other side of the coin is, doesn't mean mass unemployment in every industry it touches. So what's the macro view here?
Yeah, and so those are consistent, where we could have a lot more productivity, and that means we don't need as many people. And so you end up, from an investor standpoint, you still end up with a lot of GDP being produced. From a policymaker standpoint, you have to worry a lot about whether we have a transition period where we just don't have as much job creation as we should. And my view is, if productivity is going to surge, everyone's going to be better off in 5 to 10 years. But I do get a sense that companies now are cutting down on hiring at the very entry-level position, because when you hire a new worker, it takes you 1 to 2 years to start to really get value out of them. And if they are wondering, in 2 years, is AI going to be at a particular place where I'm not going to need as many people, maybe I should start to trim now. And I feel like we're getting to see a little bit of that, and that's a worrisome thing from a policymaker standpoint.
All right, Marc, we'll have to leave it there, but thanks so much for your insights today.
Thank you so much.
That is Marc Sumerlin, Managing Partner at Evenflow Macro. Avril.
Paul, great stuff. Thanks so much, Paul Allen in Sydney for us. Now, we're also watching some of the bigger movers in the Asia session, following on from NVIDIA's chief saying that demand looks so good, they're asking TSMC for more supply. Comments the NVIDIA chief made over the weekend that bodes well for the chip-related stocks, but also worth highlighting that when it comes to earnings and perhaps the outlook, we saw the likes of SanDisk really popping on Friday on strong data center growth forecasts. And indeed, its CEO highlighted that he's never seen NAND supercycle like this before. So this also bodes well for the likes of Kioxia, which of course is a major manufacturer when it comes to NAND. So overall, we are seeing that positive sentiment, I guess, come through when it comes to some of these AI-related stocks. Taking you as well live to Capitol Hill, where we are watching developments that could harbor or bring us closer to the end of the U.S. government shutdown as centrist Democrats agree to a stopgap deal reportedly. We'll continue discussing this on the other side of this break. We have more ahead on the Asia trade. This is Bloomberg.
U.S. futures showing a little bit more life early in the Asia session. This, of course, after we just heard that key Senate Democrats would be supporting the plan to advance the Republican bill to end the government shutdown. Already, we had seen U.S. stocks suffering in the Friday session, not to mention the dollar as well, falling alongside stocks. Treasury yield steady. We had conflicting private sector data, but the fact remains that air travel has been affected in the U.S. Consumer sentiment has fallen to more than a 3-year low. And we are understanding that this government shutdown is costing the U.S. economy about $15 billion a week. For the latest on this, let's bring in Bloomberg senior editor Wendy Benjaminson. Wendy, so what we're seeing in Congress right now, and when could we expect that vote?
We will have a vote, a procedural vote tonight. What happened is that a number of Democrats, 8 to 10 Democrats, have agreed to end the shutdown and fund the Departments of Agriculture, which includes food aid, Veterans Affairs, and Congress itself until September 30th, and every other agency until January 30th, which means it would have to be, those would have to be renegotiated in January if this all goes through, which is, there's still a few hurdles. And then all the back pay for federal workers who have been laid off during this time, that would happen, and resumption of payments to states and localities. So federal funding would start flowing again once they get past a procedural vote tonight, shortly. Then there will be another vote, possibly after midnight at our time, that would then move that bill forward. Then it has to go to the House. And the House has 48 hours to return to Washington. They've been off all this time. They would return to Washington and hold a vote after a number of delays. There's also a federal holiday this week. So it's the beginning of the end, but we are not quite at the end yet. But this will certainly give a lot of hope to those furloughed federal workers, to people like, to people who have been wanting food aid. Home heating aid as our first real cold snap of the winter hits the northern United States, and things like that. So it is the beginning of the end.
So a couple of things have to fall in place first before we see the end, as you suggested.
That's right.
But I wonder as well, when we look at this gesture, is it a form of compromise, face-saving one, in terms of whether this actually meets some of the Democratic leaders' initial goals?
That's a great question, Avril. And what was face-saving for the Democrats were the election results last Tuesday, in which Democrats won key elections in New York City, in California, in Virginia, and New Jersey. So that gave them sort of the wind under their sails, if you will, to go ahead and get this going again. They did not get what they have been demanding all this time, which is a vote to extend the subsidies for Obamacare, for the Affordable Care Act that helps poor people pay premiums, or people on Obamacare, I should say. And those premiums skyrocketed, or are set to skyrocket in January. So they did not get that done. What they got from Republicans was a promise to discuss this and hold a vote in December. And that has kept a lot of Democratic senators very skeptical that they will get that vote. But at this point, with air travel messed up and food stamps not going out and thousands upon thousands of furloughed workers, they really needed to, get something done. And this was the best they could do.
Wendy, thank you so much for the breakdown. Really great to have you. Bloomberg senior editor Wendy Benjaminson for us. Now, of course, when it comes to the U.S. government shutdown, the key concern for investors has been the lack of data, including U.S. CPI, which could be jeopardized this week. In the meantime, in China, consumer price data came out over the weekend, unexpectedly rising in October as holidays during the month boosted travel, food, and transport demand. Let's bring our China correspondent Min Lo. Min, give us a breakdown of the data. Is this seen as a sign of a sustainable recovery?
Well, it's certainly a relief for the moment because we did see the bounce in October coming in at 0.1% when it comes to CPI, a positive number there after 2 months of deflation. But broader, longer term, you look at this year, overall CPI has been hovering around zero or negative levels. And so analysts believe that this is not the start of a strong recovery. The deflationary streak expected to continue possibly until middle of next year, especially when it comes to PPI, which is coming in at negative 2.1%, slightly easing compared to the previous month of negative 2.3%, but still steep in negative territory for 2 years and 10 months now. The one encouraging sign is the core CPI, 1.2% versus 1% the previous month. This is stripping away the volatile food and energy prices, and is the 6th consecutive month of increase. So that's a positive sign, but still analysts are saying that this means that anti-involution campaign needs to do a lot more and be much more forceful. The government has so far been giving price guidances. They haven't been forcefully closing down excess capacity. And of course, the concern there is that it could lead to more job losses and destabilize the economy. And so here you can see Eric Chu, our Bloomberg economics team, saying that deflationary pressures remain pretty entrenched.
Getting a proper picture of the Chinese economy is always difficult, but Bloomberg also did its own analysis of China's price data over the past couple of years, Min. What were the key findings?
Yes, this is quite interesting because it gives us a granular picture of what price data looks like. And you look at the analysis of about 67 goods and services that we track over the past 2 years, you can see that there were huge double-digit declines in some of these items that are very ordinary household items, things like pears, potatoes, baijiu, that's the Chinese wine, eggs, eggplants. These are seeing double-digit declines. I mean, 31% down for pears. BYD cars as well down by 27%. Some of the other sectors like household appliances also saw some moderate declines despite government subsidies boosting the retail sale numbers for these categories. So you can see microwaves down about 8%, fridges, washing machines down about 4%. We did see a small category of goods and services that saw inflation picking up, and these are mainly in the services sector. So you can see kindergarten, 3-star hotel rates, attraction tickets, a slight increase there. And it shows you that, you know, the price, obviously the price changes were spread quite unevenly across different sectors, but it also means that consumers, if they continue to hold back spending, it has huge impact on companies' corporate profits, right? You look at the first half losses, companies that reported losses this year in the first half of this year, that's about more than 25% of Chinese listed companies, which is the highest in a quarter of a century. And that affects capex spending and R&D. It affects how much companies pay out to their employees and wage increases, and it leads to this deflationary spiral that has been very, very sticky and very difficult to break out of.
Bloomberg's China correspondent Maynilad there with the latest on the Chinese economy. We have more ahead on the Asia trade. This is Bloomberg.
As we watch the rebound in Asia stocks this morning, the counter that we're watching is that of Olympus, of course, that's surging about 14% as the medical devices maker's new CEO, Bob White, has been revamping things, cutting costs, and has unveiled a plan to cut about 2,000 jobs, or about 7% of its global workforce. Worth keeping in mind that the stock has been down almost double digits, 20% this year. This is Bloomberg. Continuing to track the bounce we're seeing in Asia stocks this Monday morning, with the Kospi leading the charge and the chip giants SK Hynix, Samsung really underpinning those gains. Of course, as we watch developments surrounding the U.S. government shutdown potentially coming to an end, but it is looking like a positive day in the Asia Pacific. Shery?
Yeah, and this, of course, coming after that tech sell-off that we saw last week. So what a time to be here at the AI Summit, Seoul and Expo, underway with global companies, institutions, and academics exploring the latest trends in AI and industrial innovation. Let's bring in our next guest, who's one of the speakers here, Hoon, Chief AI Officer at South Korean conglomerate CJ Group. Great to have you with us. Of course, we know CJ very well for its K content. Tell us a little bit about how CJ is looking at the AI revolution when it comes to doing your own business.
Yeah, so at CJ, we are seeing AI as the completely changing kind of game changer for to industrialize all the entire value chain. So in particularly, we in CJ are looking at the industrial sector, focusing in the lifestyle such as food, logistics, and entertainment, and retail. So that we are trying to, by utilizing AI, we want to enhance lots of people by enhancing the creativity and then unlocking operation, and then also the providing more personalized content. So what we are seeing the AI from the CJ point of view is that we are seeing the AI as a strategic, growth engine instead of just a simple, the tool.
It's interesting because CJ has so much visibility about consumer trends, right? You're very close to what the broader public wants to see. How receptive are they when you incorporate AI into your business?
So I think that's a really good question. So we are, trying to democratize all the process and the people who are participating. For instance, for the K contents, these things, a lot of people will be engaged in not only watching or enjoying, but also, hey, I want to make my own story and things like that. So the creation part and distribution part and engagement part, these three pillars will be changed completely. So that our CJ is trying to build up all the AI platform and foundations to prepare for this upcoming future.
I think you recently just launched Millstone Q, right, in the summer. So does this sort of video search and editing content, it's a video solution. Tell us a little bit about this and what it means for the future of CJ.
Yeah, so as I briefly mentioned that the culture powered by AI will be completely revolutionized. So people will demand more interaction, but also the more immersive experiences. So as a part of that, we start with Millstone Q, which allows people to participate in creating or expressing their imagination, and then providing more AI engines so that they can actually they'll make their imagination dream come true by actually expressing what they want.
Enhancing creativity is great, and the use of artificial intelligence is a very big positive, but what about the downside of AI as well that could lead to job losses where actually it's not about enhancing creativity, but actually replacing creativity?
Oh, I just want to make sure that we don't actually, I don't think AI people will aim to replace. It actually assisting or enhancing, people's imagination. Because a lot of people, like including me, I have a lot of imagination to express my thought or my own, things I wanted to do, but I have a kind of limitation in terms of my skills, so that this AI tool can, hey, Chiwon or other people, if you have anything, let me help you. I mean, let AI can help walk through to express.
But if in the past you would have asked somebody for help, it increases efficiency and you don't need to ask for somebody else for help.
Right.
Is that going to lead to job losses, and could that be a problem? Is that something that CJ thinks about?
No, I think we want to build some kind of collaborative, right? So it's not just replacing the one side from, jobs from one side to the other, right? It's kind of the creating ecosystem to work. The people can, together with whoever has kind of imagination, can come to this kind of platform or the tool, and then they can push their idea to bring to the other people. But in this process, I mean, it's not just eliminating one job, right? It's just collaborating where they can learn from, also humans can also learn from other people's creativity so that we can build some kind of ecosystem.
You have visibility not only into South Korean consumers, but also globally, right? What does this visibility tell you about the prospects of artificial intelligence? Because there's so much exuberance right now and so much money going in and out of the system. Do you believe that this ecosystem will grow and meet those expectations?
Yeah, so basically one of the key contributions expected from AI is to connect consumer to product. Right, so that through the AI, AI is trying to find, who is going to be right audience for right product, right? So that it actually trying to understand consumers' intent, and then it also AI can help deliver what consumer wants instantly, right? So these are some sort of the ecosystem what we are trying to see.
So when it comes to CJ, we talked about K content, but you also have like logistics, infrastructure, you have also foods, of course, Bibigo. Where is the sector that has the most potential for the use of artificial intelligence?
Oh, from our point of view, of course, the logistics side, right? We can actually lower the cost, but also in a creativity part or the culture part. Because as I briefly mentioned there, it's not just from the AI point of view. It's actually culture is evolved, right? Culture require or needs more immersive experiences and more personalized content, so that this based on this demand, AI can help.
Ji-hoon, really good to have you with us. Hoon is Chief AI Officer at CJ Group, joining me here at the AI Summit in Seoul. The 8th edition of this event. We have more conversations coming up in the next few hours. LG AI Research Senior Research Fellow and Head of Superintelligence Labs will be live on the China show. Figment's Vice President of Product will be live on the Insight with Hasinda Amin as well.
Shery, take a look at some of the other top corporate stories we're tracking. NVIDIA CEO Jensen Huang says he's asked TSMC for more chip supplies to keep up with booming AI demand. Speaking at a TSMC event in Taiwan, Huang said NVIDIA's AI memory chip suppliers have scaled up capacity to support the company. TSMC CEO C.C. Wei confirmed Huang's request, saying the chipmaker expects record sales every year. China has confirmed that it's taken steps to exempt compliant exports of Nexperia chips intended for civilian use. At the same time, the Commerce Ministry urged the EU to press the Netherlands to, quote, correct its erroneous practices. The move follows talks between Dutch and Chinese officials after China curbed exports in retaliation for Dutch controls on Nexperia. Pfizer has agreed to buy Metsera for up to $10 billion after a tumultuous bidding war with Novo Nordisk. Pfizer raised its offer to as much as $86.25 a share, matching Novo's revised bid. Metsera cited a call from the US FTC on potential risks from the proposed Novo deal structure. Pfizer had already secured FTC clearance for its bid. ANZ has posted a full-year profit that missed expectations, dipping 14% to $3.8 billion. The lender's annual report shows current and former senior executives took hits to variable compensation due to past problems with risk management. Its CEO is on a mission to revamp the firm by reducing costs and making the firm simpler. More ahead on the Asia trade. This is Bloomberg. Returning to the Philippines now, the country's economic growth slowed dramatically in the third quarter, with the latest figures missing all estimates. This comes as a government corruption scandal hampered state spending and dented consumer confidence. The country's stock market is currently the world's worst performer. Beyond the economic outlook, various structural challenges continue to undermine investor confidence. That's why the listing of Maynilad Water was seen as a key test of investor appetite. The public offering raised $581 million, the nation's largest in 4 years. The stock closed flat on its debut on Friday. The company is one of two franchise holders of Manila's water utilities. It's backed by two of the country's largest groups, DMCI and MPI. Japan's Marubeni also owns a fifth of the firm. Very pleased to be joined today by the president and CEO of Maynilad, Ramoncito Fernandez. Really good to see you, Ramoncito. So maybe let's start there, following on from the trading debut on Friday. Some would say it's a relatively muted response given what we're seeing in the broader markets as well. What do you think the contribution or what drove that?
Okay. Aside from complying with our franchise requirement, the listing of Maynilad has received a very strong interest both domestically and internationally. In the international front, we have gotten investments from ADB and IFC as cornerstone, aside from very interesting sustainability-led investors like Robeco and Mobilist of UK. This has really generated very robust demand in our IPO, such that at day one we had to take the upsize option of our offering.
It didn't quite translate into a robust trading debut, though, so I wonder, what are your thoughts on that?
I think we were affected also by the Asian environment last Friday, but we're looking forward to a better performance actually, because as we have seen today, the Asian markets are up again. So we hope to ride also with that.
Does the IPO cover all your funding needs, or are you looking to raise more?
The proceeds from our IPO will fund partially our 163 billion capex commitment to our regulators for this current rate rebasing. And these funds will go to our 5 pillars of our capex, namely water source, non-revenue water reduction, wastewater coverage and increasing capabilities, customer engagement, AI, and also our foray into improving automation.
Can you give us a bit more of a sense of the longer term trajectory of these capex plans? We know how, for now, the concessions seem to be focused on the west zone for Metro Manila. What are you looking at a bit further afield?
Well, currently our focus remains on further improving our services within the west zone. But a low-hanging fruit that we see is offering our wastewater and sanitation services to our existing commercial and industrial customers within the West Zone. The third area of expansion for Maynilad is servicing the 2 huge reclamation projects in Manila Bay. And definitely these cities will take about a decade to develop, but when they start construction, they will already need water, and they're already talking to us and we're talking to them. The fourth area of expansion is basically the LGUs and the water districts that are adjacent to our concession area, namely in Bulacan, in the north, and in the south, Cavite. There are LGUs and water districts there that are wanting to improve their water services, and we can offer to them starting with bulk treated water, for them to improve their water availability and pressure.
On some of these longer term plans, are there any that would come as part of an overseas strategy? How are you assessing the potential there?
Today, Maynilad is focused on the Philippines. We have an affiliate, Metro Pacific Water, that is involved in overseas projects, more specifically Vietnam.
The company has also faced some challenges in the past, including on political risk that led to the renegotiation of your contract with the government. I wonder, how are you assessing some of these risks as a sort of headwind for the company going forward?
I personally feel better after our concession agreement was revised and renegotiated, solving the contentious provisions in our contract. But in exchange, we were able to get 12% return on our opening cash position. But the other thing that gives me confidence is, aside from the concession agreement, we have a franchise together with it that has been extended to 2047, and therefore a more stable framework that we're operating. Secondly, the confidence that I'm getting is because that water is a very small portion of a monthly household of a family in the Philippines, in Metro Manila more specifically. Very far from household rentals, food, transportation, electricity, and even internet load. We are very far in the expense portfolio of a family. Therefore, we are very little contribution to inflation. The other part that I am confident is that our tariffs remain to be either lower or even comparable to our Asian neighbors.
I wonder as well, I mean, you alluded to some of this earlier, some of the big backers or investors for this IPO included the likes of the ADB. What are they contributing in terms of strategy and governance?
Yeah, we believe ADB and IFC, including the other sustainability-focused investors, will bring to Maynilad global standards in sustainability, in governance, and even operational excellence.
Ramoncito, great to have you. Thanks so much for sharing your plans for the business with us. Ramoncito Fernandez of Maynilad Water Services. Now, meantime, Super Typhoon Feng Wong has made landfall over the northeastern part of the Philippines. It's forecast to cause widespread damage, power outages, and flooding across the island of Luzon as it moves west. The typhoon has already left 2 dead and prompted the evacuation of more than 1 million people. President Marcos ordered the suspension of government work on Monday. More ahead on the Asia trade. This is Bloomberg. Let's take a look at how we're faring cross assets in the U.S. following on from that rebound or pairing of losses in tech last Friday. That supported Asia stocks on the Monday early goings, but we are also seeing S&P 500, Nasdaq 100 futures pointing to gains at the open. Of course, we're also watching for any developments that could nudge us closer to the end of the U.S. government shutdown. We are hearing that centrist Democrats, key Senate Democrats, plan to advance a GOP bill to end the shutdown, although we are also hearing that Chuck Schumer is planning to vote no on the GOP bill. So this is an evolving situation. But as I said, it's really about tech in the Asia Pacific. Shery?
Yeah, lots of earnings as well. Busy week in Asia. Tencent and Hon Hai said to be among the highlights. This as that slump in Asia tech shares, sending signals that the rally in the AI and chip stocks could be peaking. Let's bring in our Asia tech correspondent Annabelle Drulers in Hong Kong. And Annabelle, so much chatter about an AI bubble. What are going to be the key themes?
Yeah, that's right. And it's really that consistent theme. Are we in a bubble? Is the spending hype going to be sustained? Can we see more of what we've seen to come? But that's going to be really sort of the key question out of a lot of these earnings this week. So among the highlights, you mentioned Hon Hai. That's certainly one of them. Actually, the cloud, the networking segment growth, they're likely to have outpaced all other units last quarter. It is really that key division, that AI server business that's continuing to perform very strongly for Hon Hai. So those earnings coming up on Wednesday. In terms of other tech focuses, though, still that sort of broader AI theme. Certainly Softbank is going to be one of the key names to watch, particularly because you've seen that focus on the Vision Fund, some of those public, also those private investments. OpenAI, of course, is the notable one because they've channeled more than $30 billion into that business. So what they get on that front, again, is going to be important, especially because there was recent reporting that OpenAI is looking at an IPO as soon as 2027. Other themes to watch, Sony, of course, is a key name to track, given you're going to have likely seen a decline in quarterly operating profit. But as we said, there's a lot of different numbers this week.
Yeah, numbers from China as well. What are you going to be watching from there?
Yeah, there's two key companies we're going to be tracking closely. So Tencent is kicking us off. We are expecting a very strong quarter. This is a company that's continuing to see momentum, for instance, in its AI development in particular. Despite ongoing geopolitical uncertainties, Tencent is a company that's more domestically facing, so it does remain better positioned, I guess, to navigate some of those challenges. So Tencent is coming up on Thursday. The same day, we're actually going to get JD.com's numbers as well, and this is a company that's really been at the center of the e-commerce wars essentially in China between Alibaba, Meituan, JD as well. We could actually see some strong growth in some of its new business segments because JD's actually been pretty late into the food delivery game. They are starting to say loss-making as well on an operating profit or operating basis rather, but Jefferies is saying that the operating margin in the retail segment could have actually improved, and that's down to their scalability that they have, also their supply chain capabilities as well. So that is, again, some of the key earnings highlights this week.
Annabelle Jolas for us. Thanks so much. Now let's take a quick look at how futures are faring. Of course, we're continuing to watch developments surrounding the potential end to the U.S. government shutdown. But as Belle was just outlining some of these Chinese tech names to watch this week, it is also against the backdrop of core CPI numbers in China, providing optimism for the economy. Does that translate into some rebound or gains at the open in Chinese tech names? We're going to be watching that. That's it from the Asia Trade. Our markets coverage continues. This is Bloomberg.